Good morning. My name is Manju Ganariwala with Trustee Tim Ryan, and I serve as the co-chair of the FAF Standard Setting Process Oversight Committee. I'd like to welcome you and our stakeholders observing today's meeting. Before we move to our meeting agenda, I want to touch on a few items, few reminders. First, I want to note that the public comment period for stakeholders to provide their feedback on the effectiveness of the private company council is still open and will remain open until the deadline of Friday, May 31st. Stakeholders can quickly navigate to the full request for public input from the homepage of the FAF website. Soliciting thoughts from stakeholders is critical to the success of our trustees' review of the PCC and a vital part of this process. And we look forward to receiving and carefully considering your input. Next, I want to remind everyone of our due process correspondence procedure and form, both of which can be found on the FAF website. As previously expressed, these measures are meant to make it easier for stakeholders to raise potential concerns about compliance with the due process procedures of the FASB and GASB. Finally, I want to direct our listeners to the agenda and meeting materials for this session. You can find these on the FAF website under the Meeting and Events Calendar subsection. Now, moving on to today's meeting agenda, the committee will cover the following items. First, we'll hear the GASB report, then FASB report, FASB liaison to the PCC report, PCC meeting observations report, and other meeting observation reports. Let me begin with our first topic, GASB report, and I'm going to turn it to GASB Chair Joel Black.
Thanks, Manju, and thank you to all the committee members. As always, we really appreciate your time and the oversight you provide on our agenda and projects. I'm going to start with the highlights slide that is on your materials on page 108. First off, we are making good progress on all our projects, and Alan and I will spend kind of the rest of the slides talking about some of that progress. But on this slide, I wanted to talk about a couple of other things that aren't in the rest of the slides. One is that we are continuing to monitor electronic financial reporting, Financial Data Transparency Act, and in particular, that has evolved into our beginning work in 2023 on a financial statement taxonomy. That work continues and is actually, although a really long-term project, moving along really well. It was especially kind of injected with a jolt of adrenaline, I think, when we hired our new taxonomy project manager, who has brought a lot of energy and expertise to that team, and that project continues to move along. As it relates to Financial Data Transparency Act more broadly and the SEC's work there, not much to update you on there, except that we continue to hear that the joint rulemaking, which is scheduled to be have their results released for public comment in June, continues to be on track, but so probably late June they might be releasing something. And we also continue to hear that joint rulemaking will be broad enough that the SEC would believe they could not be impinged on their ability to implement as they see fit that FDTA for the municipal securities environment. Moving to the next item, while my report and largely what I'll talk about is for the first quarter, I'm going to talk about a few things that actually happened in April, which is early second quarter technically, but they were important. And the first of those is the GASAC prioritization. So our advisory council once a year does a prioritization and votes. Each member is able to vote on a long list of potential projects that we could be working on, in order to prioritize our efforts and make sure we're working on the things that are important for our stakeholders. And by far at the April, when they did that for 2024, there were two projects that by far outscored all the other projects. And those were electronic financial reporting, which our stakeholders continued to tell us is important. And we are working on it, as I just described. The other one was a new project added to that at the request of the GASAC or of GASAC members. And it received a lot of votes, and that's cybersecurity risk. And so I think for now, having just received that as that high a prioritization, the board will have to contemplate what does that mean for us, right? There are a lot of things that are important about cybersecurity risk, but where is external financial reporting in our purview, including a largely historical financial report? What are the purposes for that? What purpose can it serve in providing stakeholders with information on cybersecurity risk, or are those information related to those risks better provided somewhere else? So something that the board will be contemplating and looking at, but our advisory council told us that was really important to them. Lastly, on this slide, I wanted to highlight that we did launch GASB.org, the redesigned website, had a lot of good feedback on it, and just a couple of important or maybe interesting tidbits since the beginning of the year, which some of which is old website, a lot of it is new website. We've had 2.5 million page views, which I found interesting, done by 102,000 unique users. So interesting tidbits for GASB.org. So let's move on then to our technical agenda. And page 110 highlights the changes, of which there are none. We continue to work on all our projects, but we didn't add or remove anything from the list during the first quarter. So then if you go to slide 111, you'll see our comprehensive projects. These are our larger projects, of which we've had 2 ongoing for some time, the financial reporting model and revenue and expense recognition. The next 2 slides talk about progress on them. So let's move to 112, which is the reporting model project. This project is moving towards its end, or has moved towards its end. During the first quarter, we spent a lot of time with kind of working through the final ballot, pre-ballot draft, working through the standard and tying up all the details, which includes the board voting on and agreeing unanimously that the cost benefits that we would hope were achieved and that the standard could move forward. The board also unanimously agreed that this was Group 1 information as it relates to our scope of authority. And so a vote was scheduled for April, which was held and was approved. So the statement 103 is now approved and finalized and is actually close to technically being out on the street as it goes through our production process. But we have now finished the financial reporting model project, which we think is we're really excited about. We think is a really good improvement to financial reporting. Certainly what made it comprehensive was the potential change to governmental funds. And as we've talked about with you before, the board voted to take that out of the scope last year. And so what's left are, I think, improvements to MD&A, some improvements to the proprietary fund, statement of revenues, expenses, and changes in that position, and some other improvements that we think will really benefit users. Moving to the revenue and expense recognition project, another long-term comprehensive project. This one continues to move forward, and we've divided transactions between category A, which are transactions the board has tentatively said are transactions with performance obligations, or category B transactions, which are transactions that don't have performance obligations. We are largely at this point done deliberating all of the recognition issues related to those category B transactions. In particular, during the first quarter, we dealt with, we talked a lot about the latter half of 2023 dealing with grants, which was one of the more complicated of those. The first quarter, we made it through imposed tax transactions such as property taxes and derived tax transactions, which includes sales taxes or income taxes. And so first few meetings of this quarter, we're wrapping up category B, and then we will start into category A, which is the performance obligation transactions, which will include a lot of the things that the FASB dealt with in their section 606, which was a big project for them, and us bringing maybe some of those concepts into our literature. With that, I'll turn it over to Alan to talk now about the major projects.
Thank you, sir. Obviously, there's 2 major projects we have going right now. It's going concern, uncertainty, and severe financial stress, along with infrastructure. The interesting thing about going concern, uncertainty, and severe financial stress, if you think about it, we've operated in a world very similar to defining going concern, exactly how FASB has. But if you think about that, do governments typically cease to exist as a going concern? No. Do most governments are able to go bankrupt? No. So we have this notion that we have this extra element or extra layer for governments. They might continue to be a going concern, but not be in the best financial condition. And that's this idea of severe financial stress. The problem with that, when I say the phrase severe financial stress, what is it? And that's where the work is, because we're having to define something that currently really isn't defined and really doesn't exist right now. And that's not an easy notion. The infrastructure is a very similar topic in the sense that we did some research on capital assets. And when we did capital assets, we thought, Well, most governments get capital asset right. We know what historical cost is. We know what depreciation is, useful life is. We know a lot of that. But what do governments have that everybody else doesn't? We have infrastructure, we have roads, we have bridges, we have sewer, we have those things that are really long-lived network or system of assets. And right now, we provide very little disclosure, if any, on that information. So this is really about what can we do in the government space around infrastructure that doesn't really exist in the private sector. I will say about both these projects, they're both on target, they're both on task, they'll both have preliminary views out before 2024 is over. But one thing about these that we've done in both these is we talked about concept statement 7, which is when we defined essentiality. It relates to notes. Like, what does it mean to be essential for a note to be a note disclosure? We're taking both these projects through that process. In other words, the board so far has said, hey, here's the disclosures we think would be essential for users. Here's the disclosures we propose that we want to do. Well, now we're doing outreach with users and saying, okay, help us understand how those disclosures meet this new definition of essentiality we have in our concept statement. How are you going to use it in a meaningful way to make decisions and assess accountability? Are a breadth or depth of users going to use it? It really allows us to have this idea, do we meet that essentiality bar, which is interesting because it's an extra step in our process, an extra step in our standard setting process to make sure we get to that essentiality decision. So both these standards right now are in that window where they're doing that. But again, we think we'll have a preliminary view out by the end of 2024 on both. As far as practice issue projects, there's really 3 that are out there. The classification of non-financial assets is the one closest to final. We're trying to get that to the finish line and wrap that one up. Again, we had an exposure draft that ended on January 5th. We had 27 comment letters, which for a practice issue project is a pretty good number. That's about right. We started redeliberations. We're really close to getting through the redeliberations and talking about when we might be issuing that as a final. Subsequent events is a product we started and deliberations continue. We expect an exposure draft out on that in the 4th quarter of 2024. And then finally, an implementation guide update that we're starting to work on now that we would have out next year. For those that don't remember, we actually do Q&As. We put Q&As out and they are authoritative. And this implementation guide update is our project, which still goes through due process to actually get those Q&As. And there will be an exposure draft for that later on this year as well. And that being final probably in the second half of next year. With that said, we've also got some research activities. One unique distinction is our research activities are on our technical agenda. It's one distinction between the 2 boards. There's really only 2 active projects on there right now, and one of them is on gap structure. And the one on gap structure is really asking the simple question. We're the only board, or the only major board, if you compare this to FASB and IASB and such, to have multiple layers of authoritative literature. We have our original statements, we have our implementation guides, and we have our COD. You know, the FASB would only have their COD. IASB would only have their COD. And so we're asking the question, should we change? We don't know if we should or shouldn't. We don't know what that will result in, but we're asking that question and we're doing research on that. Now, if you think about that, that doesn't necessarily result in a standard setting project. It won't really result in anything preparers or auditors might have to do, but it may result in how they go and search our literature and how they look for our literature and how they go 3 places or 1 place. So we're continuing to work on that and continue to move forward. The board at the April update just said, let's move into a new phase of that project and say, what might the alternatives be for going forward in terms of the different levels. The second product on here is on gap utilization. And this is us, and we hope to have this, Tammy hopes to have this done for us by the end of the year. But this is us asking the question we've gotten asked a bazillion times. How many folks follow gap? It's one thing to say how many folks are on the SEC and registered companies and how many follow gap. It's very different for us to know how many governments follow gap. And so we're trying to get to a place, number one, go through all the state and all the laws to figure that out. But 2, Tammy's working to try to give us a predictive model. We can say on a predictive basis going forward, how many folks are following gap. And that's a really interesting undertaking that we're doing. And we hope to get that done by the end of the calendar year. Before I go to PR, I think you had some more comments on that.
Yes, the second bullet under gap utilization deals with the Federal Audit Clearinghouse. And so Tammy and the team in doing the research found that in the Federal Audit Clearinghouse is a place, a database, I guess, for lack of a better term, managed by the federal government that houses audit reports for governments that are required to file what's called a single audit. A single audit is required if a local state or local government expends more than $750,000 in a year on federal grant funds. And so in that instance, the federal government has required that they get a special audit that includes not only a compliance audit on federal grants, but also an audit of the financial statements, and that whole package has to be submitted for the federal government's kind of regulatory use to the Federal Audit Clearinghouse. And beginning in 2019, as part of that, and there's a form that both the preparer and the auditor have to kind of fill out in the Federal Audit Clearinghouse. One of the questions they ask is, did you follow GAAP or not? And so we were able to easily extract from the Federal Audit Clearinghouse data of all the governments that filed a single audit report in 2019, 2020, and 2021, and how many of them follow GAAP. Now, this is only a subsection of all governments. There's about 4,000 roughly that have filed a single audit report in each of those 3 years. So that's not all governments, but it's really probably a proxy for the large governments, right? This is all the states. These are the larger local governments, because if you're a larger government, you probably have larger budgets, because the 750,000 is just a numeric threshold, right? And so large governments clear that pretty easily with federal grant funding. And so the interesting data, as we found that, was that when you roughly average those 3 years, about 90% of those 4,000 governments follow GAAP. And if you take as a proxy kind of the size, because you can look at how many federal dollars were covered by GAAP by that 90%, it was roughly 97%. So 97% of the federal dollars were covered by a GAAP financial statement audit. And that excludes the states. So the 50 state governments who spend huge amounts of federal funding aren't included in that number because they would have dwarfed it. But if you included them, the dollar coverage would be 99.999 whatever percent of federal expenditures. So as we think about FDTA, and as we are trying to get market data that's similar, right, of what's filed with the MSRB to provide that information to the SEC, and for us as we think about our taxonomy, and the SEC as it thinks about the Data Transparency Act and whether non-GAAP filers, how big an issue is that? If you took that as a proxy and you said, well, large government equals large amounts of dollars of debt, if that follows through, what you're going to see are a lot of governments, especially the large ones in the market, are probably using GAAP, and it's going to be a pretty large number. It would seem. At least that's what the Federal Audit Clearinghouse data shows.
Joe, Trustee Reisig has a question for you.
Thanks, Joel. And actually, as you were describing that, I thought about it being a loaded question, but now it might be a hard question. And so I apologize, I guess, at the outset. But when I saw that in preliminarily reading the information, Federal Audit Clearinghouse, and obviously it's for those governments that spend over 750. Now it's going to be $1 million, I think, next year. And so I know, at least where I'm from, there's a lot of governments that would spend below the smaller governments. And so the question, which is maybe the tough question, is what do we do about those governments? And knowing that those might be the ones that have the least resources to have staff that's informed about the issues, understand standards, and might have more of a desire, even at their local level or from a statewide level, to exempt them from GAAP. What do we do about them, I guess?
Well, so, I mean, that's always the question, right? Is this cost benefit, and that we're setting GAAP not just for the large governments, but for all governments. So we constantly have to think about that. And it's important, as much as I just gave a lot of emphasis to that data because I found it interesting, that's not the only thing we're doing, right? We're doing a broader study that'll be done hopefully by the end of the year to tell us more, including those small governments, what's the utilization, and then the board can start using that data as a reference point. So we're not done with this. I just thought it was interesting from a large government perspective to think about it. But certainly those small governments it's important for us to think about, and we do constantly think about them. But it just is one of the things that makes standard setting hard when you're dealing with small town in Montana, but also the same GAAP is used by the state of New York.
The last slide, I'll touch it a little briefly. It's just the PR slide. It's on master page 118. And it just shows where we are with our 5 PR projects. And the only one I'll really highlight is the one on pensions that it shows being through stage 3, which is the report in the second quarter of 2024. And we were really happy to be able to provide the trustees with a draft of that report, of that pension PR report. There's a lot of work, a lot of effort went into it. I will say, and just for purpose of the meeting, that the PR has 3 objectives, and we think that the project met all of them. The first objective being, did it accomplish its stated purpose? The staff thinks that the pension 67 and 68 did accomplish their stated purposes. It talked about evaluating their implementation and continuing compliance costs and related benefits. We do think that the board got those costs, those cost calculations and those benefit calculations right, and that the benefits are more than the cost. And then finally, there was an objective about improvements we could have to the standard setting process, and the staff didn't find any and didn't recommend any improvements to the standard setting process, because we do think it's deliberative, it's intensive, and based on those two products, it's being followed. And so we're really happy with that report. There's a lot of information in it, and we're glad to provide it to the trustees.
That concludes our report. We'll be happy to answer any questions.
Okay, thank you. Any questions for Joel or Alan?
Manju, and I wanted to just mention this in the public session, and it isn't a question, but it's really just to provide kudos to the staff for GASB. I know, and I mentioned this to Joel. Lisa Parker is one of the staff at GASB, and I emailed Joel after I participated as an attendee at a CP class that Lisa provided for the Montana practitioners, and it's our annual governmental ANA, and there's about 110 participants. And Lisa was the featured speaker. She does such a fabulous job at describing GASB standards and went through many of the things that you guys have covered today. And she does it in such an understandable way. And sometimes governmental accounting, when you look at it, doesn't seem to be very easy to understand. And yet when you listen to Lisa or Joel, frankly, that was always Joel's skill before this job, when he used to do CP for practitioners, is make it very understandable. Lisa does a fabulous job. As I said to Joel in my email, Lisa's a great ambassador for GASB, and as all the staff are. And I just wanted to publicly acknowledge that. And she does a fabulous job. And the more we can have of that, the easier it is for people to understand governmental accounting. And anyway, I just wanted to publicly acknowledge that.
Thanks, Rick. I appreciate that. I did hear in there that before I got this job, I could do that. And that's the implication is that I got here and it just all went away. But I thank you for that. Lisa is tremendous. I always call her our GASB ambassador, and all the staff travel around and go to attend these conferences. But Lisa and I think Alan in particular do a lot of it and go to every state, anybody that asks us to come. So I think we do over 350 some out of those speeches a year. For a while, they were largely virtual, and so that their travel burden on some of our team was reduced, but I think a lot of them are back to in person. And so Lisa and Alan especially get their frequent flyer miles. But thank you for that. She is great. And I passed along your email to her so that she knew the compliment.
Hey, Joel, I have a question. The project on utilization, gap utilization, staff went and read thousands and thousands of reports from the federal clearinghouse, audit clearinghouse. Yeah.
No, it was because there's a feature that began in 29 for the government to click whether they use gap or not. We were able to just download the information quickly.
Okay, so it was available in an electronic format.
Yeah, electronic format.
But that's where I was leading to. Since GASB is working on the Financial Data Transparency Act project, what did you learn from that? I wanted to know, was that database just all PDFs, just like MSRB just house, volumes of PDFs in their system, or sounds like they had some electronic features that it made it easy.
They did. And I think that you do, when you submit your audit report, submit it in a PDF form.
Mm-hmm.
And so if that was the only way in which you had to go and figure out gap, we would have had to manually look at each PDF. But because the form had you describe it, it was easy for us to download. And I think that that's probably a little bit of where Financial Data Transparency Act is coming from, is how can we make this information more digitized in a way, more easily consumable? Because even that, the preparer has to manually click that button that says it's whatever. Can we automate that process for both the preparer and the auditor to the extent it has to input any information and then for the user to then consume it? So I think we are manual consumers of that data when we do our research too, right? And so we see it and feel it in the same way investors and other users do. And so I think it just proves the importance of the taxonomy work we're doing and trying to make this data more easily accessible to all that use it.
All right. Any questions from a couple of trustees who are joining us virtually? We can't see you or see your hands, so just speak up if there are questions. If not, Joel and Alan, thank you for that report. Our next item is report from FASB Chair Rich Jones. Rich?
Good morning. Thanks, Manju. Good morning, everyone. Maybe before I start, I do just want to mention this will be Hillary Salo's final meeting presenting as our technical director. Well, I know that gives us all a lot of concern. Don't worry, we can find her nearby. We know where she will be. But I also want to mention that for our August meeting, Jackson Day will be joining us and in his new role, which begins July 1st as our technical director. So looking forward to that. So ask Hillary all the tough questions you wanted to ask at this meeting. This may be your last chance. What we're going to cover today is an overview of our technical agenda. We'll talk about some due process steps that we've achieved during the quarter, whether they be final standards or exposure drafts, as well as an update on our other projects. I also wanted to spend a few minutes and talk about an update on our progress on the investor top priorities that came out of our last agenda consultation, where we stand and where we're headed. We'll give it a brief update on PIR activities, and then we'll turn it over to Sue Cosper to give an update on private company activities. Moving through your materials, if you look at slide 121, you'll notice that we did have 2 due process documents issued this period. Hillary will talk a little bit more about what those are. But you also notice that we're continuing this trend of completing the projects on our agenda. If you between now and the end of the year, if I were to give my estimate, we will have 7 exposure drafts issued, 2 final standards, 3 invitations to comment, and a final chapter in our conceptual framework, which will beg the question, what's next? And part of what's next is our agenda is refreshed through a normal agenda, people raising agenda issues to us. It's also refreshed through the board identifying issues and bringing those to our agenda. But one of the key ways that it's refreshed is through our agenda outreach. And one of those ITCs that I mentioned will be our agenda outreach sometime toward the end of this year, which will follow a similar format to the one that we executed in 21 and 22. With that, let me turn over to Hillary to give an update on our due process steps during the quarter. Hillary.
Sure. So we issued 2 final ASUs this quarter. And if we flip to slide 123, the first one relates to our project on profits interest, and we issued this final standard in March of this year. So this project really addressed how entities should account for profits interest in similar awards, which are a form of compensation that's typically issued by private companies. And these type of awards are different than kind of your typical capital interests because profit interest holders are only going to participate in the future profits or the equity appreciation associated with an entity. In other words, they don't have any rights to the existing net assets of the entity or the partnership. And so given the different form or characteristics of these type of interests, questions really have arisen about how should we account for these awards? Should they be accounted for as share-based payment arrangements, or should they be accounted for more as cash bonus or profit sharing type of arrangements? And this is something that really want to say thank you to the PCC, our Private Company Council, because our Private Company Council really identified this as an area where there was diversity in practice. And they were the ones who put together a working group that really did additional outreach and research with regards to this topic and really helped to even narrow what will be the proposed solutions associated with this issue. And they then, the PCC, recommended that the FASB take on this project because even though these types of interests are typically issued by private companies or pre-IPO companies, they can also be issued by public companies as well. So I thought that the FASB would be the right place for this project to be addressed. So the PCC did recommend at that time that the FASB take on a project that would provide illustrative guidance to really help to demonstrate how entities should be looking through or evaluating the scope of the stock compensation guidance or share-based payment arrangement guidance to see whether or not profits interests are in the scope of that guidance. So we did issue an exposure draft last May and received helpful feedback through our 20 different comment letters, as well as other feedback through our redeliberations process. Certainly we had discussions with stakeholders and advisory group members as part of redeliberations in the fall. And you can see on this slide, in total, we did discuss this issue with 95 different stakeholders, but most of our interactions were with practitioners. And I think that given the narrower nature of this issue and the fact that these types of awards are typically issued by those private companies or pre-IPO companies, we didn't expect to receive a lot of feedback from investors, and we didn't receive a lot of feedback for investors, but we did receive a lot of great feedback from practitioners, as well as state CPA societies who did support the final issuance of this guidance and did result in what I think is a really helpful illustrative example that includes 4 different fact patterns to demonstrate how an entity would account for awards with different terms. And this is one of the things I think that we heard was that these have a number of different flavors associated with them, and it'd be really helpful if we could provide examples to help people understand if you have certain terms associated with these arrangements, where you should be looking in the accounting guidance. So we were able to issue that final ASU in March of this year and did receive positive feedback in our PCC, our recent PCC meeting, that this guidance is going to help improve understanding, it's going to reduce diversity in practice, and importantly, it's going to reduce cost to analyze the accounting for these awards. So we were certainly really happy to be able to issue that final guidance. Our other ASU that we issued in March is what I would call a codification improvement project or a maintenance project. So Alan kind of previewed for this for me earlier, which is great. But just to provide some context, the FASB did go through an extensive process, which was finalized in 2009, to really codify our existing guidance and create a single source of authoritative accounting and reporting standards that are issued by the FASB. And in certain cases, when we were codifying, we were taking all these different pieces of guidance and putting them together. Our codification included certain references to various concept statements. However, as you know, our concept statements are not authoritative. So therefore, kind of retaining references to non-authoritative guidance in the authoritative guidance could actually imply that the concept statement itself is authoritative. And in certain instances, we actually had certain references in the codification related to concept statements that have since been superseded. So this is really more of a codification maintenance project where the board really wanted and decided to remove references to the concept statements in the codification and make other improvements as part of a codification improvement project. The board really decided, and we took a careful look at those references to the concept statements, and the board decided that the references were extraneous and were not required to understand or apply the guidance. In addition, the board really thought it was important to remove those references because we thought it would simplify the codification and would also really help to make sure there was that clear distinction between authoritative and non-authoritative literature. So we discussed this topic with 67 stakeholders since the beginning of the project and received 10 comment letters related to the exposure draft. And again, given this topic area, most of our feedback was received from practitioners. Generally, respondents agreed with the proposed amendments, certainly agreed with removing the references from the concept statements in the codification. But in certain cases, they were a little concerned that some of the wording changes that had been made may have had more unintended consequences. They may have gone beyond just removing the references to the concept statements. So that feedback was taken in by the board members, and the board decided to finalize only changes to amend the codification to remove those references to the conceptual framework to eliminate those potential unintended consequences. So we were able to issue that final ASU in March and believe that this represents an improvement to the codification. And it is an important part of our process, right, is to also maintain the codification. So I think this is a good example of that type of project. So with that, turn it to you, Rich.
Great. Thanks, Hillary. And maybe just to emphasize a point there, when you think about our standards, our standards have to be applied by accountants. They have to be able to be audited by auditors and provide useful information to investors. The 2 projects that Hillary just walked through, and one of the reasons that the input is skewed more toward that practitioner preparer perspective, it's not about changing the answer. It's about helping people to get to the right answer. And is our wording the best, or can it be improved? Are there examples that are out there that people may struggle with in getting to the right answer? So very often in the standard where we actually determine what the answer will be, we've gotten tremendous amounts of investor input, and that's something that we would continuously do outreach. Now what we're trying to do is make sure that the execution is appropriate. And I think that's important. And as a standard setter, as Hillary mentioned, we have, when we used to print books, 5 volumes of accounting standards that deal with just about every topic you can think of. And we do have a maintenance obligation related to that, not just changing it, but making sure that it's being carried out in the way that the board intended. So I did want to emphasize that. If you move on to slide 125, it gives an update on other significant standard setting activities during the quarter. The first category is projects in redeliberations phase. That means effectively we've issued an exposure draft, we've gotten input from stakeholders, and our staff has taken that input and is bringing those issues back in front of the board for redeliberations. I'll talk a little bit about DICE in another slide, but purchase financial assets would be an example of a project that was added as part of our post-implementation review. Throughout our post-implementation review, to the extent we hear there are issues from investors, from practitioners, from preparers, those are things that are brought in front of our board. And to the extent timely changes to those standards would be necessitated, those are things that we're willing to consider, and that would be an example of that. Moving on to the projects where initial deliberations were completed and the board directed the staff to issue a proposed ASU. What that means is that we've had the final board meeting. The board has voted to go ahead. The staff's in the process of documenting that in a proposed ASU, which the board will then review and issue their ballots based on. So the final vote will be based on those. Hillary mentioned the importance of codification improvement. One of the projects on there, interim reporting, narrow scope improvements, that is what I would call codification phase 2. Right now, throughout our codification, we have lots of disclosure requirements, but we've used all different terms throughout the FASB's 51-year history in how we talked about whether a disclosure was required in the annual or interim financial statements. And to be fair, we weren't really clear. What this is doing, and it's really incumbent on us as a standard setter to be able to tell someone, yes, this disclosure is required on an annual basis, an interim basis, or both. This is clarifying that. So we're looking forward to getting that exposure draft out shortly and looking forward to feedback from our practitioners. Did we get it right? We're not intending to change something. We're intending to clarify something. And then finally, the other projects, and I'll talk about this more since each of these touch on in priorities for investors, but these are all projects that we're working ahead on, and we do expect exposure drafts either before year end or soon after year end. Moving to the next slide, the technical agenda comprehensive overview, 126. One thing I would just emphasize here is as things do keep moving down, that is one of the reasons that we're looking at the invitation to comment. But more importantly, our invitation to comment and agenda outreach is really designed to once again bring our stakeholders into our process, pull them into our process as opposed to having them voluntarily show up at our door. So looking forward to that. And Hillary will give you a little more update on each of these things or several of these things as she goes through the next few slides. Hillary?
Absolutely. So the next slide, really, we're talking about our other projects. So kind of the changes with regards to our framework projects, our research projects, and our post-implementation review projects. And if you move to slide 128, one of the things I wanted to mention is that we have made really great progress on our proposed concept statement related to measurement. And we actually just had a meeting, a redeliberation meeting, and we're able to have unanimous vote by the board to be able to move forward with issuing a final concept statement chapter related to measurement. So we do expect to issue that final chapter here in the next couple of months. And once this chapter is finalized, this is going to represent the completion of the conceptual framework, which we are particularly proud of since the conceptual framework project started in the 1980s. So we are very excited to be able to have been able to finalize 5 of the 8 chapters in the course of the last 2.5 years. So I think this is a really great achievement. I really want to say thank you to all of the stakeholders out there who've provided us really great feedback with regards to an important tool that the board uses for a standard setting perspective. And thanks to all of our staff as well, who've been working very hard with regards to this endeavor over the course of the last few years. If we now look to the next slide, 129, you'll see a complete list of those projects. And I think when we kind of think about this in totality, right, we have our technical agenda projects, we have our research projects, and we have our conceptual framework projects. I do think probably, Rich, it's a good time to think about it from the standpoint of going back to our agenda consultation for 2021. So maybe if you want to highlight a few of those.
Great. And thanks, Hillary. And just as a reminder, We issued an invitation to comment on agenda consultation in June of 21. The comment period closed in September of 21. We had over 500 responses. The board spent from September of 21 through June of 22 effectively resetting our agenda. When I say resetting our agenda, it meant we added projects, we deleted certain projects, and we finished certain projects. But that recast agenda, we had what I would say is very positive input from investors on what they thought our priorities should be. And that we've captioned those as the top seven investor priorities. And I thought that since that's almost 2 years ago, it would be a good time to start updating on exactly the progress we're making on those investor priorities. I will tell you, it's something I have in front of me all the time on my desk. But those 7 investor priorities included digital assets, which we completed a final standard last year. Income tax disclosures, we completed a final standard last year. Disaggregation of financial reporting information, which I talked about earlier, and which we're working towards a final standard, hopefully this summer. ESG related transactions or disclosures. There's actually 2 projects on our agenda related to that. One relates to ESG linked financial instruments, which is in the scope of our scope of derivatives project, which we're hoping to issue an ED before or about at year end, as well as our environmental credit project, another project where we're expecting to issue an ED before year end. The 5th item was intangible assets, including software. We're making good progress on the software subset of that and expect to issue an exposure draft before the end of the year. The intangible assets project is something that's, let's say, a bit challenging. And the reason it's a bit challenging is because it's effectively a default category. Intangible assets, by definition, are things you can't touch. And if you think about accounting for things you can't touch, that's an awful broad category. It's not just software. It's not just mediums of conveying entertainment, video games, the movies that you see, the digital movies you see. It's technical know-how, assembled workforces. It runs on the gamut. So one thing we're going to do to help the board really understand what's the best path forward on this is to issue an invitation to comment. We plan on issuing that again before the end of the year so that we can get broad stakeholder input. Is this a topic we should be looking at in its entirety, or is this a topic where really the intangible asset category is too broad to really address the specific needs of investors for each of those subcategories? The statement of cash flows, that's a project that since the issuance of our original statement of cash flows guidance has certainly generated certain interest. I would tell you that while we hear from many investors that what they're getting today is appropriate, and that they don't need significant improvements to that statement, we hear from others that they would like us to really scrap it and move to something called the direct cash flow statement, which would be a significant change at significant cost. But one thing we hear pretty universally from all of our stakeholder groups is that the statement of cash flows for financial institutions is not providing the best information for any of them today. So we have a project on our agenda to look at the statement of cash flows specifically for entities whose business is cash, to say what improvements could we make to make that more usable for investors and a better communication vehicle for preparers. So that's on our agenda. The other portions of the statement of cash flows remain on our research agenda as we look for different paths forward. And the final item is financial KPIs or non-GAAP metrics. When you think about EBITDA, when you think about funds from operations, that information is not in the financial statements, but it is widely used by investors. There's also things called adjusted EBITDA and adjusted EBITDA and every other version there is. And there is a view that there could be a benefit to incorporating certain of that information into the financial statements, but it immediately raises the question, well, what does that mean? Does it mean defining it? Does it mean mandating it? It sounds great. EBITDA, a lot of people are using it, but most financial institutions would not find it very helpful. So what does that mean? Does it mean focusing on industry, focusing on measures, or doing something else from more of a top-side approach? To get better information for our board, we're also planning on issuing an invitation to comment on that topic toward the end of this year. And that is our update. I know we've made good progress on this. We've got a path forward on many of these things to understand what's the there and what would be the best path forward for our board. With that, let me turn over to Hillary, who's going to touch on PIR activities. Hillary?
Say, Rich, can I just mention
Yes.
with this group, thank you for putting this in here because this is a great schedule that shows all that you guys have had going on, but also that you're completing all this stuff, which is pretty significant. Now, of course, next year there'll be practitioners and preparers saying, what are you doing to me? With all these things. So prepare.
I would emphasize, we have good input from all of our stakeholder groups, and we certainly factor that in implementation dates and making sure that we have good adoption of our standards.
And speaking of,
Hey, Rich. Hey, Rich, it's Tim Ryan. Is it okay if I ask you a question?
Absolutely, Tim.
Yeah, so thanks to you and Hillary for the work and the team. A couple of the projects you just mentioned, as you pointed out, when you look at cash flows, intangibles, and non-GAAP measures, those are topics, as you point out, that have been looked at in the past. Knowing that in the past it's been hard to get consensus, it's still worthwhile to undertake it. But what should we think about going forward, knowing that we likely won't have full consensus because we've tried in the past? So what should we anticipate going forward, and how are we making sure that we don't just spend the resources and end up in the same place, but also that we get the right amount of feedback?
Yeah, no, it's a great question, and maybe the key is we're going to try something different, and it's really, to the extent that some of our stakeholders have solutions to these, we're certainly interested in hearing them, but maybe the answer isn't as broad as we've tried in the past. So, for example, if one approach would be to come up with a single accounting model for intangible assets. And then every single thing that's considered an intangible asset would be subject to that. But that may not make the most sense. Maybe it does make sense if there is a different model for software versus for film versus for assembled workforces. Or maybe the issue is that there's inconsistent models for internally developed intangibles and those acquired in a business combination. And maybe the answer is the business combination accounting is wrong, not the internally developed assets. So I think it's part of this is the broad outreach that we need to do, but going into it with an open mind and really asking those questions about what would be the best way to approach this. It may turn out that narrow fixes or broad fixes are the right answer, but I do think we need some more information to kind of come up with that path.
Thank you, Rich.
all right. So another way that we get feedback from our stakeholders is through our post-implementation review process. And I know the GASB just talked about with regards to their pension project and being in stage 3. Well, we have moved into stage 3 of our PIR process related to our revenue recognition guidance and our revenue recognition standard. Just as a reminder, last year we did host a public roundtable in the fall to get feedback from stakeholders with regards to implementation of the revenue recognition standard, including the expected benefits and expected and actual benefits and costs of the revised guidance. What issues arose during implementation, how are those addressed, and what areas of guidance continue to be challenging to apply, as well as thinking about it through the overall effectiveness of the standard setting and the PIR process related to the revenue guidance. So we did recently talk about that feedback that came out of the roundtable discussion, as well as all of the other feedback that we had gathered through phase 2 of the revenue recognition PIR guidance with the board in a public meeting. And we actually, because the revenue guidance is a substantially converged standard with the IASB, we're actually going to be having a similar discussion with the IASB at the end of June. So we're going to host a joint educational meeting. We're both going to talk about the feedback that we've received with regards to our respective revenue recognition guidance and talk about whether there are any areas moving forward that we're hearing the same type of feedback that may be interesting for board members for purposes of if there's a need for any future standard setting efforts. We also are going to take the opportunity to give the IASB an update with regards to our post-implementation review process on our leasing standard. They're going to be looking at their post-implementation review related to their leasing standard. And we're actually pretty far through our stage 2 process. So we're going to give them an update with regards to that process as well. And also with regards to PIR activities related to leasing, the board will be looking at whether or not they want to take on a project related to the accounting for lease costs incurred during construction period, which is a topic that had come up with regards to our post-implementation review discussions associated with the leasing guidance. And with regards to CECL, we continue to support stakeholders' efforts by responding to inquiries and proactively seeking feedback on any potential issues that arise. And as Rich mentioned, we are in the redeliberation stage of our purchase financial asset project. So we are certainly talking with many stakeholders as part of that process as well. So with that, maybe just to give you an update with regards to other significant activities, just wanted to give you an update on the reconstitution of the Emerging Issues Task Force. As we've previously discussed, we received feedback through the agenda consultation process from our stakeholders, not just on what should be on our technical agenda, but also where are there other areas where we could improve the standard setting process. And one of the clear areas where they said we could improve is looking at our interpretive process, our Emerging Issues Task Force, and really trying to figure out if there were ways to make it more efficient and effective to be able to respond in a time-sensitive manner to narrow financial accounting issues. So we have gone through the process over the course of the last year, really digging into the EITF process and understanding where we could make improvements to improve that efficiency and effectiveness of the EITF process. So we have recently updated our website for the new operating procedures for the EITF, which under those new operating procedures, we really do have the EITF focused on identifying practice issues and identifying potential solutions to those practice issues, really as a pre-agenda phase before the board would take on a project. So now the outcome of the EITF will be a recommendation to the board to take on a project related to an issue and a proposed solution associated with that issue. If the board wants to take on that project, it'll move through the board standard setting process, and then we can let the EITF go back to identifying additional practice issues and additional proposed solutions. So I really think of this as a great opportunity to use the really talented folks on the EITF to their highest and best use with the identification of issues and proposed solutions. We also, in April, were able to announce the 11 members of the EITF. We have a great group of individuals who come from the chief accountants at the big firms, controllers from a preparer perspective, and investors across this group, across different industry groups as well. So I think we have a great subset of folks that are able to help us address these narrow issues. And we certainly have been able to see them in action already. We did have an agenda committee meeting with the new group in April, and they've decided to add a project to their agenda related to determining the accounting acquirer, which we're going to be talking about in our June EITF meeting. So I think we already see them up and running, and it's very exciting to be able to see all of the process changes coming into place, and we're very excited to engage with them going forward.
Great. Thanks, Hillary. Just before I conclude, I do want to recognize we've certainly laid out an ambitious agenda for the remainder of the year. Part of that is one, I think it's important that we continue to push ourselves. Our stakeholders will push us, and I think it's definitely reflected in our agenda and our progress. I also want to, when you think about well done accounting standards, a key element of there is they're done. And we are focused on completing our projects, completing our agenda, and doing it in a high quality, effective manner. So I look forward to updating you for the balance of the year and if there's any remaining questions.
Thank you, Rich. Any questions for Rich or Hillary? Again, to just echo comments that Trustee Ryan made, great progress quarter after quarter. You are keeping, just accelerated pace and just focused on, keeping to your timetable, your ambitious timetable. So we really appreciate all the hard work of you and your staff. All right, so with that, we'll move on to the next item on the agenda, which is a report from FASB Liaison to PCC, Sue Cosper. Take it away, Sue.
Thank you, and good morning. Our last PCC meeting was held virtually on April 18th. It was Jerry Shaver's first official meeting as chair of the PCC, and it was also David Finkelstein and Brad Hendricks' first meeting as official members. The PCC report is in your materials beginning on page 134. The April agenda and meeting recap are also there beginning on page 180. I'll share a couple of highlights with you from their April meeting. Specifically, PCC had a very robust discussion on their potential agenda priorities. The committee identified a short list of potential projects that will be discussed further at the June meeting, but those projects included the application of CECL to trade receivables and contract assets, improving the guidance for debt modification and extinguishments, lease simplifications, and a revenue recognition implementation issue on the presentation of conditional retainage and overbillings. The PCC also discussed whether to add a project to its agenda on stock compensation disclosures. The PCC did not support adding the project to its agenda, with some members observing it was not sufficiently pervasive and it did not meet the case for change, and considering other higher priority initiatives that the PCC could focus on. The PCC also discussed recent decisions made by the FASB on a variety of projects. Overall, there continues to be good engagement and dialogue among the PCC members and the board. I will also observe that Jerry spent a significant amount of time individually with PCC members, with the board, with the FASB board members and staff in preparing for his new role. Turning to town halls and liaison meetings, we had a PCC liaison meeting on March 19th with the Institute of Management Accountants Small Business Committee. It was the PCC's first interaction with this group. About half of the PCC members attended the virtual meeting, including Jerry, myself, and other FASB staff members. The IMA Small Business Committee shared trends and concerns, observations affecting private companies, as well as suggestions for PCC's future work plan. In June, we will be hosting a town hall event at the AICPA's Engage conference. Jerry, Michael Chang, Katina Curtis, David Hoagland will be attending on behalf of the PCC, as well as myself and Jim Croker from the FASB. It's a very productive event. It's focused on feedback from private company practitioners. The next PCC meeting will be held in Norwalk on June 24th and June 25th. It includes a joint session with the FASB Small Business Advisory Council Committee to discuss projects of mutual interest. So with that, I'll pause here for any questions.
Any questions for Sue? Looks like none. Thank you, Sue. That's a great report. So at this point, we will move on for reports from trustees and their observations of various meetings. So first, I'm going to call on Trustee Rick Reisig, who observed PCC meeting on April 18th.
Thanks, Manju. And I'll just echo what Sue had mentioned. Of course, it was Jerry Shaver's first meeting as chair. And I'll just mention as an observer, it might have taken a couple of minutes for the meeting to achieve, interaction with his cadence, because his cadence is very different than Kenny Wright's cadence. But it didn't take him long to get into the flow of things with the way Jerry operates, and he's very pragmatic and direct, and which is his skill set that we all hope for, and certainly that we're going to benefit from that. One of the things I did want to mention, and Sue did in her report, as far as the vote taken by the PCC to not go forward with the disclosure project, the share-based compensation disclosure project, and I thought that was notable. I appreciated their thought process. And again, I think, that's Jerry's leadership too, to say, look, is this something we want to spend our time on? And we've spent considerable time on it already. Is this something we want to spend our time on? So I think it was very commendable and notable that the group decided to not go forward. I also think it was notable that 3 of the individuals wanted to go forward, which I think lends itself to say it was a worthwhile project. And it had been, and it was time well spent by the staff to do the research they did, and for the PCC to deliberate the way they did, and the FASB members to provide input the way they did, ultimately to come to the decision that maybe this isn't getting us the outcome that maybe we thought it might. But that's the process. That's why you go through that process. At least it was to me. And so I think that was very worthwhile that they did that. I like the flow that they're going now with the prioritization project, not unlike FASB, and looking at all the things that they have in front of them and how best can they spend their time, and to look at it from a priority standpoint. And one thing I'll just touch on, and I know you'll hear more about it from Sue in future meetings, certainly more from Jerry, is the thoughts that both of them have in regards to outreach. I'm really encouraged by that. I know they both have some great ideas on what they want to do to enhance the visibility of the PCC outside of Connecticut, and And that's exciting. I know we'll hear a lot more about that in the coming meetings that we have, but it's exciting. I think it's going, they're doing good things. And between Jerry and Sue and collaborating on how the direction they want to take the PCC and how they want to get feedback from their stakeholders, I think it's really encouraging. So.
Thank you, Rick, for that report. It's exciting to hear all the exciting things that are going on in PCC, it sounds like. Our next and final item is a report on any other meeting observations from the trustees in the last quarter. So I am first calling on Ted Goldthorpe. Is Trustee Goldthorpe here? No, he could not attend the meeting. So next, I'll call on Brian Lewis. Brian's going to, he observed the GASB meeting on March 25th and March 26th. Brian?
Yes, good afternoon, and thank you for the opportunity for me to report. As an observer for the GASB meeting on March 25th, the main topic of conversation was revenue and expense recognition. There was a robust discussion using prior research, and specifically Statement 33 was discussed, as well as feedback from stakeholders considered on this matter by the entire board as well as staff. A lot of the conversations was around recognition of pledges to governments, and I would say the key discussion was the timing of pledges and how they would be booked as receivables. One of the big takeaways was to make sure that there is consistent application and a focus on accrual accounting and maintaining that as a basis versus leaning towards a cash basis that is approach that some could take in the future. So again, very robust conversation, great interaction between both board and staff, and I think the outcome of the 1.5 hour discussion was consistency and best practice on, again, revenue and expense recognition for governments.
Thank you, Brian, for that report. And finally, I'm going to call on Trustee Marion G., who observed the GASB meeting on May 6th.
Thank you, Manju. I had an opportunity again to observe the May 6th meeting, which focused on post-implementation review of GASB 67, which is financial reporting for pension plans, and GASB 68, which related to accounting and financial reporting for pensions. GASB staff presented an overview of that post-implementation review. The GASB board really focused on the three objectives of the post-implementation review process that was set by the trustees. And those three objectives included, did the standard accomplish the stated purpose? Also, was there an evaluation done of the standards relative to the cost benefit of implementation? And then finally, was there feedback that was obtained that would allow for the board to improve the standard setting process? So that information was available in the post-implementation report. I would encourage you, if you're interested, to take a look at the summary. It did a really nice job of outlining the process from the beginning to the end, if you will. There was a quote that I think Joel made that really kind of captured my attention, and it was, we don't just issue statements and forget about them. And I think that was true with this particular process, because the board, along with the staff, went through, I think, a really good process of trying to determine if there were improvements that could be made that would assist not only with these particular standards, but going forward, if there's an opportunity that we could learn from this process to improve the next set of standards that will be issued. So again, I think the board did a really good job of focusing on outreach to stakeholders. There was really a comprehensive process done with respect to engagement with stakeholders, preparers, auditors. I thought, again, that the process was well done.
Thank you, Marion, for that report. We have now reached the end of our public session of the FASB Standard Setting Process Oversight Committee meeting. Again, many thanks to those who joined us today for this webcast. Please note that the next next public meeting of the Oversight Committee will be held virtually on Monday, August 12th. Thank you and have a great day.